So finally, let's discuss how the accounting of lease shall be carried out in the books of the lessee. Gone are the days when we used to classify the lease as finance lease and operating lease in the books of the lessee. So please do not carry forward your understanding of AS 19 over here. Okay, finance lease, operating lease concepts are there, but it is there in the books of the lessor. As far as the lessee is considered, Ind AS 116 has done away with the classification of lease into finance lease and operating lease. So finance lease, operating lease concepts are no longer there. Where? In the books of the lessee. As far as a lessee is considered, let us say you are signing a lease agreement and you are a lessee. Check, is it a short-term lease? Okay, then you will get a recognition requirement exemption. Is it a lease for a low value asset? Yes, you will again enjoy an exemption from the detailed accounting requirements of Ind AS 116. But let us say it is neither a short-term lease nor a lease for a low value asset. Then you have no choice. Whatever we are discussing, that is the accounting that you are supposed to carry out. You are supposed to incorporate the asset that you acquired on lease in your books. This asset will be referred as a right of use asset, right? We will coin the short form ROU. So ROU asset is to be incorporated in the books. Because it is an asset, obviously it will have a debit balance. So my accounting entry will be ROU asset account debit, right? I will debit the ROU asset, and against that you will have to create a liability. So we will say to lease liability account, to lease liability account. Okay, there can also be some cash transaction. Maybe you are receiving some cash or you are paying some cash. So that can also be there in this accounting entry. But the main parameters of the accounting entry will be the ROU asset, which is going to be debited, and the lease liability, which is going to be created, right? Since ROU asset is going to be incorporated, whenever an asset is incorporated in the books, remember it is always incorporated at its cost. Remember Ind AS 16, remember Ind AS 38. Whether it is a tangible asset or an intangible asset, we are initially incorporating at the cost. So that's what they say here, that the lessee, right? If you see here, they are saying lessee shall recognize the ROU asset at its cost. So how are we going to determine the cost of the ROU asset? Here it is. They are saying cost of ROU asset is the sum total of, okay. The first thing that we will consider is the initial measurement of the lease liability. What exactly comprises in the lease liability? That is a separate discussion. We will be discussing at great length that what items will be included when you are calculating the lease liability and what items shall be excluded. We will be discussing that. But right now you have to understand that the very first item that we will consider is the initial measurement of the lease liability. How will you get the lease liability? They say this represents present value of the lease payments over the lease term. As I said earlier also, what will be included as a part of lease payments, what shall be excluded, that is a separate discussion. Right now understand that whatever are the items which will form part of the lease payments, they will be discounted. See, you are using the word present value, so they are going to be discounted, and I will find out what is its present value. This is the very first item that will be included when you are calculating the cost of the ROU asset. Okay, if you are saying I require present value, that means I require a discount rate. What will be my discount rate? Okay, they say discount rate used is, here it is, the discount rate used is interest rate implicit in lease. And in B they are saying if above is not readily determinable, then incremental rate of borrowing of the lessee. So basically you have a choice. You can go for interest rate implicit in lease. That seems to be the first choice, right? They have not really mentioned it, but this seems to be the first choice. But then they are saying that, see, if you do not get this rate, then use the incremental rate of borrowing of the lessee. Understand one thing. Let us say there is some item of PPE. Let's say this item of PP is costing 10 lakhs of rupees. So here is a party who is first purchasing this item of PPE. And then this item of PP is given out on lease. So let us say it is given out on lease for 5 years. Okay. And the lease rent that has been agreed to is 2,50,000. So as a lessee, you are signing a lease agreement. You are promising the lessor that yes, every year I will pay 2,50,000. Now this 2,50,000 that you are paying every year, a part of this 2,50,000 will be towards the recovery of loss of interest of the lessor. Please understand this thing. When you are paying 2,50,000, entire 2,50,000 is not for the PPE. The lessor is thinking in this way that see, first I have to buy the asset for 10 lakhs. That means my 10 lakhs is blocked, and it is blocked for a period of 5 years. Because the 10 lakhs of the lessor is blocked, the lessor is losing interest. So when this asset is given on lease to you, let's say you are the lessee, and when the lessor is asking you that you pay 2,50,000, you are paying, right, as a lessee, you are paying towards the cost of the asset. You are also paying towards the recovery of loss of interest for the lessor. Isn't it? This is the reason they are saying that the lease payment should be discounted. Okay, entire 2,50,000 is not towards the ROU asset. 2,50,000 has two components. Certain portion towards the ROU asset and certain portion towards the recovery of loss of interest of lessor. Okay. So the moment 2,50,000 is discounted, the interest element is eliminated. And all that is left out is what you are paying towards the ROU asset. So because you are calculating the cost of the ROU asset, it is necessary that the lease payments are discounted and brought to their present value. The moment you are doing this, you are eliminating the interest element. And the moment the interest element is eliminated, I realize as a lessee that what am I really paying towards the ROU asset. Since you are calculating the cost of the ROU asset, present value of these lease payments is the first item that I will consider. Since you are planning to eliminate the loss of interest, that is the reason they are saying that the first choice of discount rate is interest rate implicit in the lease. The leaser knows that this is the rate at which I am charging interest. The leaser knows that see, because I've invested 10 lakhs in this asset, I am losing interest at 8%. So 8% will be used as the discount rate. But this rate is known to the lessor, while the accounting is to be done in the books of the lessee. So as a lessee, I will ask the lessor that tell me at what rate are you charging interest. The lessor may directly tell me that I am charging interest at 8%. So I will use 8% as my discount rate. Or I ask the lessor that please tell me at what rate you are charging interest, but the lessor is not ready to reveal that rate of interest. The lessor is of the view that if the rate of interest is revealed, as a lessee, you may start bargaining on it. Because if the lessor by chance says that I am charging interest at 18%, obviously as a lessee, I will start bargaining that 18% is a bit too high. Come on, bring it down. So the lessor is not ready to reveal the rate. Then what to do? Then the lessee will ask itself that if I take a fresh loan, at what rate of interest will a fresh loan be available? So let us say a fresh loan is available to the lessee at 11%. Then 11% will be considered to be incremental rate of borrowing. And this incremental rate of borrowing will become our discount rate. So first choice is the rate at which the lessor is charging interest, which is nothing but the interest rate implicit in the lease. However, if not available, then we will go for the incremental rate of borrowing of the lessee, right? So that will be the first item that will be considered by us. Second, they are saying payments to lessor at or before the commencement of the lease. So you might have asked the lessor to make some customization to the asset, and then we are supposed to bear those expenses. So even that will be also added to the cost of the ROU asset. So they are saying this represents payment towards customization, designing of the ROU asset. These costs are capitalized. So if I consider this as A and if I consider this as B, then the cost will be A plus B. So if you are calculating the cost of ROU asset, then start with the initial measurement, and because these costs will be capitalized, I will add the same. It's also possible that I may get some incentives from the lessor so that I sign the lease agreement. For example, I want an item of PPE and there are multiple lessors who are ready to give that asset on lease. So one of the lessor is saying that, see, if you sign this contract with me, I am ready to give you a cash incentive of 5,000. Whatever is your lease rent for the first year, you do not pay me 5,000. You are getting some incentive from the lessor. If you are getting this incentive, remember, if you are getting this incentive at or before the commencement of the lease, we are supposed to deduct it. See, this represents cost incurred by the lessee which are reimbursed or assumed by the lessor. Incentives are deducted, right? I'll have to deduct the incentives. Remember, this is a payment to the lessor, so it should be added. This is an incentive received from the lessor, so it should be deducted. But both of them should be happening either on the commencement date or before the commencement date. You get it? So cash incentive is available at the time of signing the contract. If a cash incentive is available at the time of signing the contract, I will deduct that incentive and I will find out what is the cost of the ROU asset. Next, initial direct costs incurred by the lessee. If there are any expenses that are incurred to effect the lease, then those expenses have to be added. So I will add this particular item. They are saying these are incremental costs that would have been incurred if the lessee had if the lease had not been entered into. If there is any commission that I am supposed to pay to the agent, if there are any legal fees, if there are any documentation charges, and if all these expenses are being borne by the lessee, we should add the same. After all, when you are entering into a lease agreement, ultimately it's a legal document. So documentation charges will be there, stamp duty charges will be there. Who is going to bear these expenses? If these expenses are to be borne by the lessee, we should add it and find out what is the cost of the ROU asset. And finally, initial estimate of cost of restoration or dismantling of the ROU asset. This is very much on the lines of Ind AS 16, isn't it? We have already seen in Ind AS 16 that when you are calculating the cost of the PPE, cost of the PPE includes initial estimate of dismantling cost, initial estimate of the restoration cost. The same principle is been applied over here. Whatever is the initial estimate of the cost of restoration or the dismantling of the ROU asset, that should also be added, right? We are saying treatment is similar to Ind AS 16. So you will have to figure out, for example, you are entering into a lease agreement for 10 years. At the end of the 10th year, the leased asset will be returned back. When the leased asset will be returned back, are you going to incur any dismantling expenditure? If the answer is yes, then estimate what that dismantling cost will be, discount it and find out what is its present value. Because as per Ind AS 16, it is the initial estimate of the dismantling cost that has to be included. So I will include that initial estimate of the dismantling expenditure. So whatever expense that I am projecting that I'll have to incur at the end of the lease tenure, I will discount it and find out what is its present value. And that I will include, okay, that I will include in the cost of the ROU asset. So as you can see, the cost of the ROU asset will be the first item, initial measurement of the lease liability, plus are you incurring any expenses towards the lease and these payments are to be made to the lessor, added. Are you receiving any incentives from the lessor, deducted. Are you incurring any direct expenses which otherwise would not have been incurred if you had not entered into the lease? You should capitalize that, so add that. And are you going to incur any dismantling expenditure or the restoration expenses? Then please find out what is its initial estimate and add it to the cost of the ROU asset.